preparing to live stream the meeting. આવી ગયું મારામાં થાય છે એક જ મિનિટ.
I think we should start the proceedings now.
Yes.
No, just give 2 minutes, no? Let him just go. Thank you. Okay, fine.
Yes, so Jayesh bhai, please take up the opening remarks.
Yeah, so good morning, friends. Am I audible?
Yes
sir, very good.
Quite audible.
Yeah, so normally what happens is the president sets the ball rolling, and in his absence the vice president would set the ball rolling, and of course the meeting in charge would be the chairman of the subcommittee. But since the president and vice president both are not available, as a past president I have been given the pleasant task of set the ball rolling for this very important study circle meeting on the evergreen topic of discussing recent decisions on the subject of direct taxes, more particularly the Income Tax Act. And I think this is the right time to take up this topic, because right now we would be very busy in completing the tax audit work. And I think it would be very handy to know what is the latest thinking in the judiciary about the new or the old issues which every now and then crop up in our day-to-day practice. So I think the chairman of the subcommittee deserves kudos for that. And I welcome all of you. With these remarks, I hand over the charge to Shri Utsav bhai. Utsav bhai, please.
Thank you, Jayesh bhai, for the warm welcome. CA Jayesh Parekh ji, I'll request you to please introduce the speaker and take the meeting proceedings forward.
Thank you, Utsav bhai. Thank you, Shaif Dalal sir. So our today's speaker is speaking on the topic of you can say latest judgment on direct taxes. So Mr. Vijay Patel, he is a chartered accountant, is a person who is not only the member of Institute of Chartered Accountants of India, but also member of Bar Council of Gujarat. He is into practice of law since last 10 years and has a vast experience of appearing before you can say various forums as High Court, ITAT and NCLT. He has also gained experience of working with the Income Tax Department Senior Standing Counsel before High Court of Gujarat for around you can say 7 years. So not only in the field of direct tax, he has represented clients in other branches of law before High Court of Gujarat. So currently he is an advocate on record in High Court of the Gujarat. So over to you, Vijay.
Thank you so much, Jay, for those noble and kind words. The past president, Shri Jayesh bhai Shaif Dalal, Secretary Mr. Vijay Parekh and Mayur bhai Muda, Subcommittee Chairperson Mr. Utsav Hirani, past presidents of the association, distinguished members of the association, ladies and gentlemen. It is a great honor for me to address the seminar at the study circle meeting on recent judgments of direct tax laws. And I am absolutely delighted to be with you today. It is nice to be speaking to my colleagues, Chartered Accountants Associations today. Now, before I begin today's topic, I'll be sharing my thoughts with you, all of you, and all present here are also well versed with the subject matter that is under discussion, that is Income Tax Act. Now, sometimes what I would be saying would be very basic and obvious things, but there are certain interpretations which needs a discussions today, which are helpful, or which are highlighted certain things which would be helpful in our day-to-day practice, as somebody of us would be appearing before the first appellate authority, before the Income Tax Appellate Tribunal. So I thought of making some slides which all of you can follow, and if in case any of you have some thoughts or an opinions that needs to be shared, I would gladly be welcoming such thoughts and opinions from all of the members of the association. I'll just share the screen. Is it visible to everyone?
Yes, it's visible.
Yes. Now, before I start with first decision, why I've selected is because the Punjab and Haryana High Court has have observed certain things with respect to service of notice. The discussion is very important to see. Now, the first judgment that I would like to discuss is in the case of M3M India Holdings Private Limited, which is reported in 419 ITR, page number 1. As everybody is aware that for the purpose of maintaining an application under section 245C before the Settlement Commission, the assessment proceedings ought to have been pending. Now, this is one of the sine qua non requisite or prerequisite of an application before Settlement Commission. Now, if an application is, if the assessment is completed, then an application before Settlement Commission is not maintainable. Now, this judgment precisely decides the issue as to when and at what point of time an assessment is completed within the phraseology of assessment to be completed, which is the wordings in section 245C. Now, everybody is aware, again, with respect to the judgment of the Honorable Gujarat High Court, which lays down the principle that when the Income Tax Department dispatches the assessment order in a postal department, then it is ought to have been concluded. Now, the thought in the judgment is issued under section 245C, but the principle laid down in the decision can be applied for the purpose of taking contention of limitation in any of the proceedings with respect to receipt of notice or receipt of an assessment order which might be beyond the period of limitations. I'll just, now the issue in Shalibhadra case was whether the assessment proceedings is complete if assessing officer hands over the assessment order to the postal department. But the Gujarat High Court observed that if the order of assessment has been passed by the assessing officer, his case still may deem to be pending since the assessment order is not dispatched, leading to a conflicting situation. Now, for the purpose of settlement commission issue, that is section 245C, now assessment is deemed to have been pending. I'm quoting the observation from the Honorable Gujarat High Court decision in case of Shalibhadra. Now, for the purpose of section 143 and section 147, as the case may be whatever, the assessment of would be deemed to have been passed. Now, the Settlement Commission thereafter would be authorized to proceed and process the application for settlement, and as a natural consequences, the order of settlement would be passed. Now, a similar issue came up before the Punjab and Haryana High Court in case of M3M India Holdings Private Limited. Now, the facts I'll just briefly elaborate is that the assessee in this case informed the assessing officer that he wanted to approach Settlement Commission and therefore the assessment proceedings may not be completed. The assessing officer completed the entire proceedings and handed over the order to the postal department. Before the Settlement Commission, the assessee contended that at the time of making an application, the assessment proceedings were pending and therefore his application would be maintainable. The Settlement Commission held that at the time of an application under section 245C, the assessment was not complete and therefore the settlement application is not maintainable. The assessee preferred a writ petition before the Punjab and Haryana High Court. The court has interestingly discussed that the phrase completion of assessment proceedings would be viewed from the viewpoint of an assessee and not from the viewpoint of a department. So what the court has held is very interesting. Court has held that dispatching of an order in a postal department would not mean that the assessment is complete qua the assessee. It would be complete only when the order is served upon the assessee. Now, there was an argument on behalf of the petitioner that unless and until assessment is not served upon the assessee, the proceedings ought to have been pending, which came to be accepted by the Honorable Punjab and Haryana High Court. So I would like to just quote and read from the observations. I quote, in the present case, the matter has to be viewed from the perspective of the assessee. That is to say, when the assessee is bound to act, it cannot be said that before the notice was even sought to be served upon the assessee, the proceedings qua him could be said to have been concluded. Now, this means that for the purpose of settlement application, when the order is served upon the assessee, then and then only the assessment is termed to have been completed. Now, I quite accept that though the issue of settlement commission is already an academic now, but recently it has happening before judicial forums that notices have been received on email a day after it has been digitally signed. So we have been taking this specific contention that since we have received the notice, or let's say 1st of April 2021, then it is ought to have been beyond a period of limitation, and therefore the same is required to be quashed and set aside. And qua this, notices have been issued by various high courts. Now, against this judgment, SLP has also been preferred by the department, which is summarily been rejected on a ground of delay. Therefore, the SLP in case of Shalibhadra, which is pending consideration, and it is yet to be listed before the court. Now, before I begin with the second, is there any question and with respect to this? Or shall I begin with the second judgment? Utsav bhai?
I think you should move ahead with the second case study.
Please, madam.
And if at all there is any Q&A, we can take it up in the end.
Please. Thank you. Yes. Now, the second case calls for an interpretation of section 170 of the Act, which is recently been amended by way of insertion of subsection 2A. And why I have selected is because it casts an onus upon an assessee. I'll just briefly discuss a little later. Now, what section 170 says is that subsection 1 provides that where a person carrying on a business has succeeded by another person, the assessment shall be completed in the hands of the predecessor till the date of succession of business, and after that it has to be in the hands of the successor. Now, what was happening during the assessment proceedings was the assessees were never informing the incumbent assessing officer that there is an order of amalgamation in our case, therefore the company is in non-existence. So in consequence of that, what was happening, that notice also come to be issued in name of the erstwhile company, that is the transferor company, and the assessment is sought to be passed against the transferor company. Therefore, the assessee directly invoking Article 226 of the Constitution before the High Court prayed that since the notice as well as the assessment is passed against a non-existing company, it should not be considered as valid. Now, though this issue is already been settled by the Honorable Supreme Court in case of Maruti Suzuki Limited, which is reported in 416 ITR 613. But why I have chosen the judgment is because the present case, which is also of the Supreme Court, seeks to distinguish the facts of Maruti Suzuki with that of the Magun realities. Now, the facts are very easy, but it involves this way, that there was a search action in case of a group company of Magan realities. Notices were issued to every company. In this case, Magun Realities Private Limited. Interestingly, despite the order of amalgamation prior to the date of search, the present assessee sought to reply to the notice issued by the department. It is further interesting to note that the assessing filed the return of income in its name only, in name of Magan Realities Private Limited. That is a transfer account. Further, in response to the notice under section 143(2), a specific query was asked to the assessee to inform about the status of reorganization of business of the company, and details were also asked about whether there is any order of amalgamation of the company or not. Now, to this, the assessee replied, not applicable. The assessing officer sought to pass order in name of Magan Realities Private Limited, represented by Magan Transferee Company. This order came to be challenged before the High Court, contending that since the order of assessment was passed in the name of the transferor company, which is a non-existent company, the assessment order is bad in law. The High Court allowed the appeal of the assessee, and thereafter the department was before the Supreme Court. Now, it is interesting to note that the contention of revenue before the Supreme Court, though they relied on the decision of Maruti Suzuki India Private Limited of the Honorable Supreme Court, and thereafter the High Court allowed the application. Now, there are threefold submissions of the department before the Supreme Court. One, that since the name of both the companies was mentioned in the assessing officer, the mistake or said defect or an omission can be curable under section 292 capital B. The other contention was that what prejudice is caused to the assessee while passing an order, since he has already submitted to the jurisdiction of by way of filing a return and by way of filing a reply to that. The third contention was, and this is very important, that the revenue was not informed by the assessee that there was an amalgamation order prior to the date of search. The amalgamation took place with effect from 1/4/2006. The Supreme Court categorically held and set aside the order, despite the order of the Supreme Court in case of Maruti Suzuki India Limited, that one, that amalgamation is not a death of an entity like that of the winding up, and therefore amalgamation per se does not ordinarily invalidate the assessment order. Secondly, the assessing officer the Supreme Court sought to distinguish the judgment in case of Maruti Suzuki India Limited with that of the present case, wherein it was categorically held that the assessee had participated in the entire proceedings, and therefore the assessment order is not to be treated as invalid. Now, why I have chosen this judgment is because there is a recent amendment, and by way of that amendment, subsection 2A came to be inserted in section 170, which I would like to share. Just give me a minute. Is everybody can see section 170? Now I'll just read subsection 2A. What it says, that notwithstanding anything contained in subsection 1 and 2, where there is succession, the assessment or reassessment or any other proceedings made or initiated on the predecessor, here in case of Magan Realities Private Limited, during the course of pendency of such succession, shall be deemed to have been made or initiated on the successor, and all the provisions of this act shall, so far as may be, apply accordingly. Now, this explanation is very important. What it says, it seeks to define pendency, means that the period commencing from the date of application for such succession of business before the High Court or tribunal, or the date of an admission of an application for the corporate insolvency resolution by the adjudicating authority as defined in section so and so, and I'll quote, ending with the date on which the order of High Court or tribunal or the adjudicating authority, as the case may be, is received by the principal commissioner or the commissioner. I'll take a pause for here a moment. That what my reading of this subsection or this explanation is to the effect that by way of this amendment, now a duty is casted upon an assessee that, see, though you have existence, now there is a duty casted upon the assessee to see that the order of amalgamation be informed to the commissioner or the income tax department. Now, this was the only purpose for which I wanted to highlight this judgment. Yes. Now, the third judgment which I have selected is pertaining to the allowance of loss under section 28(1) of the Income Tax Act. Now, the third judgment is in case of Bhagirath Engineering Limited, which is reported in 439 ITR 704. Now, here is very interesting facts which is involved in this case, is where an assessee had already undertaken certain contractual work. Due to certain reasons, the principal employer was not in a position to pay the assessee entirely in cash or bank by way of a bank transfer. So instead, what the principal employer did was that he issued a bond, that is RBI bond and Export Credit Guarantee Corporation bonds to the assessee. Here, one thing is to be noted, that assessee was not willing to accept this bond, but however, in view of the situation, he had accepted the bond. By accepting the bond, what he had done in his balance sheet was to indicate it under the current asset or the receivables. Another thing to note is that the assessee had not been paid with the entire consideration of the contractual value, but instead he had accepted the bond. Now, at the time, after certain years, the assessee went to the market and sold the bonds, and he had incurred the loss by way of a valuation. Now, it claimed the said loss on revaluation of the bond. However, now the said claim came to be disallowed by the assessing officer. The matter traveled before the High Court, and the High Court allowed the appeal of the assessee. The High Court interestingly held that the loss incurred by realization of such RBI bonds would be in the nature of revenue expenditure, and therefore it is allowable as deduction to the assessee. Why I have selected is this because of a peculiar nature of the facts of the case. The first peculiar nature which I feel is that the assessee, the first peculiar nature which I feel is that the assessee was compelled to accept the bonds instead of the revenue by way of a cash. The second thing is the treatment of these bonds in its balance sheet or books of accounts. Now, kindly note that the assessee had treated this bond as a current asset, and regularly he was claiming, or by way of a notional loss, he was adjusting, or by way of passing a journal entry, he was treating it as a current asset. Now, there are also judgments where it says that investment in bond would be considered as an asset. But here, interestingly, the High Court observes that the assessee was compelled by way of special circumstances that he ought to have accepted the bond. Now, I pose a question to myself that had the assessee made a conscious decision to accept the RBI bond in place of a cash amount, would the assessee be entitled to claim loss in realization of such by way of a sale? Now, in my opinion, the answer would be no, because he had claimed or made a conscious decision by way of purchasing or saying that, yes, you give me RBI bonds instead of cash. In this present case, he was compelled to accept, and therefore the deduction, the deduction in claim of loss by way of realization is allowed under section 28(1). Yes. Now, if someone from the association or the members who are participating can say, can anyone tell me that what are the two things that is certain in one's life? Can anyone? I'll tell you. The first thing which is certain in one's life is death, and the other certain thing is taxes. Now, these are not my words, but these are the words of Benjamin Franklin, and this particular judgment is been started by a very our own High Court, jurisdictional High Court, Gujarat High Court, by saying that nothing is certain in life except death and taxes. So now, in the present case, which is in case of Bhupendra Bhai Bhikhabhai Desai, why I've selected is also a reason that the issue is fairly settled, but here the revenue sought to argue a very particular point of law, though it was not accepted by the High Court, but only for the contention raised by the revenue side, I've selected this case. Now the issue is involved in this case is that the revenue proceeded against a deceased person and framed an assessment under section 153 capital C. The facts are that after expiry of assessee, the wife of assessee, that is a legal representative of assessee, filed a return of income in response to notice under section 153 capital C. Now the verification, interestingly, kindly note that verification of that return was done by the wife, that is the legal representative. Now everybody is aware that assessment or a notice against a dead person is squarely covered by the decision of the jurisdictional high court in case of Chandresh by Jaintilal Patel, which is reported in section reported in 413 ITR 276, that the notice issued to a dead person under section 148 is invalid. Now kindly again note that this decision of Chandresh Bhai is qua notice under section 148 only, and present case pertains to section 153 capital C. Now the issue in the present case was whether the principle of Chandresh Bhai would be applicable to the proceedings of section 153C or not. Now revenue argued and placed reliance on section 139 capital A, and which tried to indicate that the assessee was duty bound to inform the income tax department that the assessee is no more and therefore the assessment is to be invalid. The assessee also sought to rely on section 140 of the Act to state that the legal heir, that is wife, is not authorized to verify. If I have already stated that the verification of the return was done by wife. So interestingly, revenue raised a contention that since the wife is not an authorized person, therefore the return should not be authorized to be verified by a legal representative. Now the court came to a conclusion that though the same principle of Chandresh Bhai Patel would apply to a notice under section 153C of the Act, and further it read down that the only criteria for a notice or an assessment to be valid if it is against a dead person is only when the legal representative submits to the jurisdiction of the notice. Let's say he participated in the proceedings despite saying filing return, filing reply to the notice. The court also went on to add that there is no obligation on the part of any legal representative to inform to the department that the assessee is expired and therefore the proceedings to be dropped. Now, to attract section 159 of the Act, the assessee has to participate in the proceedings in order for the assessing officer to have jurisdiction in case the notice is issued upon the dead person. Now, if we take the recent amendment, which I have already highlighted and shown to all, in section 170, though section 170 is totally different, which is in case of business and by way of succession, but revenue in future, whenever in proper case, would certainly rely on subsection 2A to contend that now since in case of an amalgamation also, there is a duty casted upon the assessee to inform that the present assessee is no more or the company is amalgamated and therefore the assessment is to be valid. The other interesting argument that was made by the department was that section 153 capital C of the Act talks about other persons. and the department referred to the definition of persons and contended that the word person also includes body of individual. However, though the Honorable Gujarat High Court did not accept the content, but interestingly, the argument was that though it is a person, the legal representative is to be assessed, and therefore the assessment is varied. But the Gujarat High Court held that the term person does not include a legal representative, and legislature was conscious enough to bifurcate the body of individual and legal representative as contained in section 159 of the Act. Now, on coming to this conclusion, the Gujarat High Court relied on one judgment in case of Shabina Abraham. I don't recollect the citation, but I will share it with Utsav later. But I would recommend every member to read this judgment only for the purpose of an argument or the contention that is put forth by, despite the settlement of this issue in case of Chandresh Bhai Jayantilal Patel. The next judgment, though may not come across with in day-to-day hearings or proceedings before the first appellate authority or for the assessment, or let's say before the tribunal. But why the reason for me to select this judgment, though it is not directly connected with the Income Tax Act, but it tries to explain, in my opinion, what is a transfer for the purpose of capital gain in case of family disputes. Everybody might have heard that certain families execute family settlement agreements and all. Now, whether that family settlement agreement would constitute a transfer or not, the sole purpose for me of selecting this judgment was that, so that fellow professionals and chartered accountants can also plan accordingly. Now, though this judgment, which is passed by the Honorable Supreme Court, it is not reported, but I came across in certain groups, which is in case of Ravindra Kaur Grelwal and Manjit Kaur. Now the question, this judgment does not deal with any of the provisions that I already indicated. It seeks to explain the concept of transfer. The question that arose in this is whether distribution of immovable property amongst the family members would require registration or not. This was the issue which came up before the Honorable Supreme Court. Now, the facts of this case are that the family of plaintiff had executed a document. The document in question is a family agreement. The nomenclature used by the Supreme Court is Memorandum of Family Agreement. Now, that family agreement was amongst the real brothers of the family. Now, the issue before the Supreme Court was whether that this Memorandum of Family Settlement was required registration or not. Now, after elaborate discussion, discussing the contours of family arrangements, the Supreme Court interestingly came to a conclusion that since the contents of that Memorandum of Family Settlement does not include any recital, this does not require registration, and therefore the transfer by way of immovable property was valid. Interestingly, the Supreme Court also also observed that by virtue of a family settlement or let's say family arrangement, the members of the family or their near relations by way of such arrangement ought to be governed by special equity, particularly to them, that is particular the members of the family. Now I raise a question that whether such family settlement or memorandum of whatever the nomenclature is would result into transfer of properties from one person to another, and whether such transfer would result, definitely such transfer would be without consideration if it is amongst the family members. Now this issue was already settled by the Honorable Supreme Court in case of Ramchandran versus Girjanand Devi, which is reported in AIR 1966 Supreme Court 323. Now it was observed in that case that such a family settlement between the members of the family, I am reading from the observation of the Honorable Supreme Court, that such family settlement between the members of the family to bona fidely put an end to the dispute amongst themselves is not a transfer. Now, it was also not a creation of an interest. Now, in case of family settlement, each of the party takes a share in the property, and by virtue of independent title, which is admitted to the extent of other parties. Now, every party who takes the benefit under it needs not necessarily be shown under the law to claim as interest in the property. Therefore, interestingly, by way of this observation, therefore, for the purpose of constituting a transfer by way of a family arrangement, there has to be a proper recital and there has to be a proper drafting in order to say that, okay, this is a transfer within the definition of a transfer contained in the capital gain. Now, the nature of family settlement and allied questions, whether such transfer by a family arrangement would amount to transfer for the purpose of capital gain, also have been dealt with by several Supreme Courts and also by some of the high courts, which have explained that family settlement is, and by way of family agreement, is not amount to transfer and therefore does not require registration. Now, there are two such decisions which I would like to just highlight. One is in case of Commissioner of Gift Tax versus D. Nagritham, reported in 226 ITR, page number 342. And the another is in case of A.L. Ramannath, which is reported in 245 ITR, page number 494. So, the observation in this judgment was quite interesting to see that whether transfer by way of, whether shifting of the immovable property by way of a transfer in case of family settlement would amount to a transfer or not. So we can utilize this judgment by way of planning during that family disputes. Now, the third judgment, which now the next judgment which I would like to discuss is in case of the Delhi High Court decision. Why I have taken is because there was an amendment, or let's say there was an insertion of a time limit for the purpose of claiming immunity under section 270 capital A. Now the decision, everybody is aware that by way of a Finance Act 2016, there was a wholesale change in the scheme of penalty under the Income Tax Act, and in place of 270(11)(c), the new provisions have been incorporated. Now, the new provision which contains in section 270 capital A was brought to the statute with effect from assessment year 17 and 18. Now, accordingly, according to which, that is to section 70A, the assessee is liable to be penalized for under-reporting of an income. I repeat, it is an under-reporting of income in case of situation of concealment of income. The subsection 3 of section 270A prescribes as to what is under-reporting of income. Now the penalty, if I have the section, I'll just share it with the friends. No, I don't have that. Yes, I'll just read it. Section 270 subsection 3 prescribes for under-reporting of income. Now the penalty which is prescribed under section 270 capital A is 50% of the income on under-reported income, and in case of an under-reporting of income which is in consequence of misreporting of income, that is the whole together a different aspect, then the penalty would be 200%. Now what is under-reporting in consequence of misreporting is also contained in section 270 capital A, and there are 5-6 instances for which it is considered as misreporting, under-reporting in consequence of misreporting. Now this list is not exhaustive. Section 270 capital A was sought to be introduced, which contains that, see, if an assessment order is passed against an assessee, if he pays in consequence of passing assessment order, normally penalty provisions under section 270 capital A is initiated against every assessee. So to gain an immunity or to claim the immunity from levy of penalty and from prosecution, the provision as contained in section 270 capital A was introduced, and according to which assessee does not appeal against the addition or disallowance made in the assessment order and chooses to pay the tax within 30 days from the date of the service of demand, then the assessee may apply for immunity from levy of penalty, let's say under section 270 capital A and under section 276 capital double C. But the condition is he should not file an appeal, and penalty should be for only under reporting of income, which is simply said there, under reporting of income. The penalty should not be with respect to under reporting of income in consequence to misreporting of income, because if the penalty has been initiated in assessment order for misreporting of income, then such person would not be eligible to claim or file an application under section 270 capital A of the Act. Now here, interestingly, in this case, Schneider Electrical Southeast Asia preferred an application under section 270 capital A by filing a declaration which is prescribed within time limit. Now the assessing officer, there is also a time limit prescribed for disposal of this application under subsection 4, which says that the assessing officer has to pass an order of an application within 30 days of the application, receipt of an application. Now the assessing was slept over the application and did not dispose of an application within a period of 30 days. Thereafter, the assessing officer, or after some time, assessing officer rejected the application. Assessing approached the High Court, that is Delhi High Court, by way of this writ petition under 226, claiming that when there is a limitation period prescribed under the statute and the order is passed much beyond a period of 30 days, then the order ought to have been treated as null and void, firstly on the basis of which is barred by limitation, and secondly on merits as well. The assessing officer The second thing which was considered, which was argued by the petitioner was that is the assessing officer could not reject the application when there is not even a whisper or iota of all the charges of misreporting of income, either in the assessment order or in an application under section 270 capital A of the Act by way of an order. Interestingly, I have been experiencing that whenever an application have been preferred, though under this section or though under section 132 capital D for release of asset, bullion or jewelries, at times assessing officer are not passing an order within the time prescribed under the Act, and therefore the decision of this Honorable High Court, first, that it held that the order passed beyond the prescribed period of 30 days as provided in subsection 4 of section 270 capital A now will be barred by limitation. And in case, in absence, it further held it on merits also. It also held that in absence of any misreporting of income, the order is required to be quashed and set aside. I think this is the first decision so far as section 270 capital A is concerned, and there might be other views from the Honorable Delhi or other high courts so far as to say that whether this limitation period of 30 days is mandatory or declaratory only. But however, as and when the case comes, it would be subject to interpretation from the High Court only. Yes. As everybody is aware that day in and day out, the appeal or an application is not been disposed of within the time frame given within the statute or so. Now, this is a very interesting judgment of the Honorable Supreme Court, which deals with the validity of third proviso to section 254, which says that in spite of expiry of 365 days from granting of stay order, and even if the delay is not attributable to the assessee in hearing the appeal, the stay order granted by the learned tribunal is automatically stands vacated. Now here, if we interestingly note that section 254 earlier, there are earlier decisions also wherein a question was raised whether the learned tribunal would have the power to grant stay under section 254. Then discussions went on, and in case of M.K. Mohammed, which is reported in AIR 1969 SCR, Supreme Court report on page number 65, which says that yes, section 254 contains a provision and which says that the learned tribunal has the power to grant stay as an incidental or ancillary to the appellate jurisdiction which is casted upon under the Act. It is to note that when the stay was granted for almost 3 years to 4 years, the matter was never been listed for hearing before the learned tribunal. So the legislature came up with an amendment by way of insertion of the first two provisos, which says that when a stay is being granted by the learned tribunal, then endeavors be made to hear that matter within a period of 180 days. The second proviso, which provides that if in case the initial, that is, this is the third amendment, this is the first amendment which is made by way of insertion of the proviso. The first amendment says that the second proviso, despite the learned tribunal not hearing the matter, the stay granted would automatically stand vacated. Thereafter, the same decision came to be challenged before various high courts, and it came to a conclusion that, see, despite no reason on the part attributable to the assessee. This is a draconian provision and therefore this needs to be amended. I will directly jump to the third proviso, and which is very interesting and subject matter of this PepsiCo Food India Private Limited, which says that the third proviso, which says that despite it uses the word even and if not attributable to the assessee beyond a period of 365 days, the stay ought to have been vacated. Interestingly, the PepsiCo India went before the Delhi High Court. Delhi High Court read down the judgment, and again the CAT, the revenue challenged this appeal before the Supreme Court, and it sought to contend that it has to be automatically vacated. Justice Nariman in this case had interestingly observed and read down that the word even contained in the third proviso, as well as if not attributable to assessing, the third proviso has to be read in facts and circumstances of the each case, and beyond a period of 365 days, the stay granted can be extended if and only if it is not attributable, the delay is not attributable in case of or attributable to the assessee. So therefore the words has been struck down from the statute itself in third proviso to section 354 of the Act. Now the next decision pertains to section 50C of the Act. And before I begin, I would like to read that now what section 50C contains. Can everybody see this? Yes. Now, section 50C subsection 1, what it provides is that where the consideration received or accrued as a result of transfer by way of assessee of a capital asset, being land, building, or both, is less than the value adopted or assessed by the authority of state government for the purpose of payment of stamp duty in respect of such transfer, the value so adapted or assessed shall, for the purpose of section 48, be deemed to be full value of consideration received or accruing as a result of such a transfer. Now we are discussing the third proviso. The first proviso, which says that provided that where the date of agreement fixing the amount of consideration and the date of registration for transfer of capital asset are not the same, the value adopted or assessed or assessable by the stamp authority on the date of agreement may be taken for the purpose of computing full value of consideration for such a transfer. Second proviso further provides that the first proviso shall only be applicable in case of where the amount of consideration or a part thereof has been received by way of an account paid check or electronic transfer so and so, or through so and so before the date of agreement for transfer. Kindly note, before the date of agreement. Third proviso, which interestingly gives a bandwidth of 10%. Earlier it was 5%, now interestingly it is 10%. It provides that where the value adopted or assessed or assessable by the stamp valuation authority does not exceed 110% of consideration received or accruing as a result of transfer, the consideration so received or accruing as a result of transfer shall, for the purpose of section 48, be deemed to be the full value of consideration. Right? Now here, why I have selected this decision, it is in case of Mariel Fernandez Cheryl. Yes, which is reported in 123 taxman.com 252. The first, we have already read what the first proviso says. The legislature, this judgment which says that the introduction of section or the third provisos is retrospective in nature from the date when section 50 capital C was introduced. It interestingly notes, however, this judgment does not seek to clarify whether this third proviso does not seek to clarify if there is an unregistered agreement and the sale consideration is received by way of a banking channel, then what would be the situation? The third proviso also does not refer to a situation where, though the agreement is not registered, but the transfer is by way of a banking channel. Then in that situation, what would be taken as the full value of consideration for the purpose of section 50C needs an interpretation from various courts, because it raises a pure question of law. Because third proviso, or let's say all the three provisos, were introduced solely for the purpose of containing that the agreement should not be antedated, simply to avoid assessment to tax. Right? So this is for the reason why I have selected this decision. Now, one thing also needs to be note that there can be various situations based on Maria Fernandez Cheryl, that whether by way of rule of interpretation can only the stamp duty valuation be taken into consideration for the purpose of section 48, or only the full value of consideration can be taken would be the subject matter of interpretation by various courts. Now, the next judgment is from the Patna Tribunal. This is also with respect to penalty in case of search assessing. Now, we all know that search is conducted under section 132 of the Act. Now, there are certain cases where, in case of a search, penalty provision has been prescribed in section 271 AAB with respect to undisclosed income, which is relating to a specified year, a specified previous year. Then the penalty, penalty in certain cases is not leviable under section 271 AAB of the Act. Now, there are two questions which I pose to myself. One, whether section 271 AAB uses the word shall, or whether this section is mandatory in case of a search assessing, that yes, in every search cases there has to be a penalty under section 271 AAB. And second, whether there is a discretionary power upon the assessing officer not to levy penalty. Now, these two questions is sought to be answered by the Patna Tribunal in case of Shiv Bhagwan Gupta versus Assistant Commissioner of Income Tax, report in so and so. Now, before here also, section 274 is also very important. I just read. Yes. Section 271 AAB, subsection 1, which says that the assessing officer or the commissioner of appeal, kindly note, the word is may, notwithstanding anything contained in any other provision of the Act, direct that in case where search has been initiated under subsection or section 132 or so and so, the assessee, here kindly note, I'll pause for a moment. Here the word used, the assessee shall pay by way of a penalty. Now there is also an interesting, in first line it is used the word may, the second is the word shall, right? I'll also read the definition of undisclosed income. Which is contained in explanation C. Now, undisclosed income means any income of a specified previous year represented either wholly or partly by way of money, bullion, jewelry, or other valuable article or thing, or other documents or transactions, which has not been recorded on or before the date of search in books of accounts or other documents or other previous year, or otherwise not been disclosed to the principal commissioner before the date of search. And further, any income of a specified previous year represented either wholly by any entry in respect of an expenses recorded in books of accounts or other documents maintained in normal course of relating to a specified previous year, which is found or to be false and not to be found to have been had, not been conducted. Here, in case of Shri Shiv Bhagwan Desai, Shiv Bhagwan Gupta, the tribunal holds that, see, there are words used is may, that the assessing officer may levy penalty. So it is a discretion given to the assessing officer to levy penalty under section 271 AAB, and then the word shall is used. Therefore, the Patna Tribunal held that in Shiv Bhagwan Gupta that section 271 AAB is a self-contained code, and therefore a discretion is given to the assessing officer to levy penalty, and not like, okay, I take for situation if section 271 AAB is not applicable, then penalty definitely would be applicable in other provisions if the condition is fulfilled. Now take for example, the tribunal also held that there has to be a reasoned order to weigh the undisclosed income only. The penalty has to be for undisclosed income only. Now the surrendered income, in my opinion, that surrendered income does not fall within the definition of undisclosed income, and therefore the penalty cannot be levied. But penalty that can be levied under other provisions as well. Now there is also a question whether the penalty can be concurrent. Let's say under 271 AAB and 270 AA also. The answer to this question is no, because subsection 2 categorically provides that concurrent penalty would not be levied. The other aspect which the Honorable Tribunal notes that the penal provision has to be interpreted very strictly, because it has to be interpreted very strictly, and if and only if the condition is specified as contained in section 271 AA, then and only the penalty would be levied. Now the next judgment which I would like to discuss is in case of Anan Kumar Jain HUF versus the Income Tax Authority. This is reported in section. This is reported in 432 ITR 384. Here the facts involved is such that there are two searches. One in case of Anan Kumar Jain and other in case of a third party on the same day. Now that third party, and during the course of search, statements came to be recorded in case of the third party. Notice came to be issued in case of the assessee under section 153C, 153 capital A. And based on the statement which was recorded in case of the third party, the assessing officer sought to make addition solely based on the statement which was obtained during the search. Now, interestingly, there is two distinctions. One, it is settled and time and again courts have held that addition based on statements recorded during the course of search would not be the basis of addition in course of assessment proceedings. But why I have selected this case is because it gives very interesting reading is that whether statement recorded in case of a third party, let's say in this case X party, would be treated as an incriminating material in case of Anan Kumar Jain, because ultimately it is obtained during the course of search, and that statement was used as an incriminating material in case of Anan Kumar Jain. And it is also settled that when there is an incriminating material available during the course of search, additions can be made. Now here, the incriminating document is the statement taken of X person, categorically now even before I elaborate, here section 132 subsection 4 says that statement taken during the course of search would be regarded as an evidence and would be admitted as an evidence. Now, whether these would constitute an admission under section 132 subsection 4, though the court have held that addition based on the statement and solely statement cannot be made, but the question is still writ large that whether statement during the course of search and can be used before the third party in view of to be read with section 132(4), because that statement is taken on oath and can be, in my opinion, since it is been taken on oath and the act specifically provides that it can be used as evidence, then it will definitely in different jurisprudence, not in income tax, but even in criminal proceedings also, statements taken of certain accused or other witnesses can be used against accused, and therefore this can be applied in the income tax provisions as well. Now, the last decision, if I have yes. Now, the last decision which I would like to, this is very recent decision and is of the Gujarat High Court in case of Amar Jewellers Limited versus the Assistant Commissioner of Income Tax, which is reported in section 137. Is reported in 137 taxman.com 249. Now here the issue which was sought to be raised by the department, the assessee, was that there was a completed assessment in under section 153 capital A. Now that assessment was sought to be opened under section 147, and it was contended by the assessee that though section 153A contains a non-obstant clause, can it be said that the completed assessment under section 153A be reopened? Can be reopened under section 147 and 148 of the Act. Interestingly, the Honorable Gujarat High Court came to a conclusion that the non-obstant clause not to be read or not to be regarded always as a repealing or superseding the entire provisions. And also it held that non-obstant clause in section 153 capital A does not exclude the applicability of section 147 and 148, and therefore it held that yes, the concluded assessment under section 140 or 153 capital A can be reopened. Now, if I have concluded my judgments, if there is any questions and answers from the members of the association.
If there are any questions or answers, we can take those questions. participants can raise their hands and they will be unmuted to ask their question. I think, Vijay, there are no questions at present. No one has raised their hands.
Please.
I think we can conclude the session. I would now call upon Jay Sharma, who is convener of the Direct Tax Study Circle Committee, to give vote of thanks. Jay, if you can please take this up.
Yes. Thank you, sir. Very good afternoon to all of you. On behalf of CA Association Ahmedabad, I extend hearty vote of thanks to our today's learned speaker, Sri CA and Advocate Vijay sir, for sparing his precious time from his busiest schedule to enrich us on the recent judgment came under direct tax laws. On topics such like success into business, section 170, newly introduced penalty section 270, capital AA, and penalty section 271 AAB in the case of search, and give the insights of it. Sir, you have nicely presented each and every case laws by narrating the facts of the case, what kind of questions of law raised before the authorities, what are the arguments before the courts by the assessee as well as revenue, and how the courts interpret the law and how the decision arrived at. So, sir, we all the members present over here definitely gained the knowledge and equipped ourselves with the latest jurisprudence. And thank you so much to all the members who present over here and attending this meeting and made this study circle meeting successful. At the end, thank you all for your participation and your valuable support.
Thank you, Vijay.
So,
thank you very much for sparing time. So we should conclude the proceedings now. Thank you, everyone. Thank you, participants.